Anyways, John, it's like getting a little crazy out there, isn't it?
Well, just a little. I think it's going to get a lot crazier, though. I'll go out on a limb and say the second half of the year is going to be very volatile. And then early in 2019 will be great for precious metals. So let's revisit those predictions in a few months and see how it goes.
Absolutely. Well, as we speak now, gold is down at $1,227.50. I got to say, it took me by surprise. I wasn't expecting this hit to happen. And silver down 19 cents to $15.57 the ounce. I don't want to say it's a great buying opportunity, but I think that they're really oversold, and they're going to come screaming back. You know, something will happen somewhere, and all of a sudden, forget it. I mean, look, John, oil has gotten hammered. It was at 75. And all the good cycle guys I know say it can't maintain $75 the barrel. Sure enough, you know, it's down to 67.5 the barrel. I mean, that's a big decrease. So something to think about. We'll talk about that later. In the meantime, we have a question from Daniel. And he said, next time you have John Rubino on, which is now, who I think is the best on your show, kudos to you, John, ask him what are the dynamics when a foreign country sells their U.S. Treasury holdings? Are they paid in U.S. dollars on an original balance sheet held by the Treasury Department, or paid in gold or physical dollars? I mean, well, I guess if you're Iran, you get paid by physical dollars, but I don't think anyone else. And he goes on to, he just wants a better understanding of what will happen when these companies dump their treasuries, and what will happen with all the dollars created. And he said a while back, I asked Andy Hoffman the same question, and all he could say is, it's fake. Everything is fake. So, and that's no slap at Andy. I mean, you can't argue with him there. So, country dumps its treasury holdings like supposedly Russia has done or is doing. It's kind of like, in a way, pointless, isn't it? Because they just get dollars back.
No, they get their local currency back in a lot of cases. For instance, first of all, about the physical thing, nobody ships physical dollars around the world anymore. It's all electronic. And unless we're paying off a dictator or something like that, you know, remember in Iraq during the Iraq War, they would find warehouses full of dollars.
Same in
billions of dollars, but then they all disappeared. Nobody knows where they are.
Yeah, it's like somebody's sitting pretty. Hey, same thing happened in Afghanistan, because they just pay off the warlords in paper dollars, but that's the exceptional case. Those are outside the norm of international monetary practice, right?
Yeah. So let's look at China for an example of how it works in the real world. It's all electronic, first of all. There's just debits and credits transferred electronically from one bank account to another. But China uses its foreign exchange reserves in part to stabilize its own currency. For instance, if yuan is going down, they'll sell some of their treasuries to maybe a Chinese bank, and they'll get yuan for those treasuries. And that lowers the domestic money supply, so it supports the value of the currency, and vice versa. If the yuan is too strong, the Chinese central bank will step in and buy some treasuries from a bank on the open market and give them newly created yuan, which increases the money supply. So that's the big dynamic out there, where countries use their foreign exchange reserves to manipulate their currencies one way or another, and it's all electronic. It's just we're going to transfer these bits over to your computer account, and they have physical vaults where they store their gold. And presumably they keep some cash. But mostly it's the same way it works with, for instance, your brokerage account. You know, there's no physical money going back and forth, but there's a transfer of ownership from one electronic account to another. Now, when the world, let's say, as is probably coming at some time in the future, decides they don't want to hold treasuries anymore because they don't trust the US dollar, then you'll see people selling them in return for all kinds of other currencies, but generally not US dollars. And that's going to force the value of the US dollar down. If China decides it wants to sell all of its treasury holdings and they get yuan or euros or something else for them, then that's downward pressure on the dollar. Because that means there are dollars that are basically orphaned out there. Nobody wanted them, so they had to be traded at lower and lower value in order to get somebody to buy them. And a lot of those dollars will come back here. Basically, what a dollar is, when we send it out into the world, it's a claim on U.S. assets. And to the extent that people want to hold those dollars because they perceive them as a good store of value, that doesn't mean anything to U.S. markets. But when people lose faith in the dollar and they want to send those dollars back to the U.S. in return from real stuff, that's another thing that a big bank or a big company or even the sovereign wealth fund of somebody like China can do. They can take their dollars and buy U.S. stuff. They can buy our real estate. They can buy our companies. And that pushes up the price of those things, which manifests as inflation, right? So dollars coming back, which they will at some point to the U.S., will be inflationary. And, we're talking 15 or 20 trillion dollars that are out there in the world. So when that happens, it's potentially destabilizing. And that's the big issue with global holdings of dollars. We want them to stay out there and not come back here and cause trouble, but we can't control that if we create too many dollars because people won't want to hold them. They'll want to turn them into real stuff. And a lot of that real stuff will be in the US, where we will then have inflation. And somewhere out there in the future, that eventuality is coming. We don't know when,
Correct.
But it's going to be one of the big problems we have to deal with in the future.
Yeah, I totally agree with you. I think that day is coming. We've managed to stave it off so far. Part of the reason is the infrastructure that the dollar commands, and there really is no alternative to it other than precious metals, cryptocurrencies, which have recently crashed, and put it into hard goods or whatever. But for corporations that need to park billions of dollars overnight or over the weekend, say, they're not going to put it in a Chinese bank. They're not going to put it into Chinese government debt because it just lacks the credibility. Now, probably in all likelihood, someday that will very likely change. We don't know exactly when, but at some point, probably going to change. And then we'll see the true demise of the dollar. But for now, the bulk of every country's reserves are held in dollars. Yes, they've increased their gold holdings, etc. But still, the dollar is the only game in town. But you're right. At some point, that could very well change, and we will suffer the ramifications of it accordingly.
Yeah, they're all diversifying. Everybody out there is buying other currencies and gold, and in a lot of central bank cases, equities. So there are other things you can use for your reserves than dollars, but you're right, dollars are still the majority of central bank reserves out there, which is a privilege for us and a source of power for the U.S., but it's something we can ruin. And we seem to be doing our best to ruin it. The central government in the U.S. is taking on immense amounts of debt. And every other entity in the U.S. is borrowing too much money. And we have no choice going forward but to create a lot of new dollars to bail out all these bad debts. And that's going to be a challenge for the U.S. dollar as the world's reserve currency. So that's one of those things that's out there in the future. And I think that gold and silver, to a lesser extent silver, will be among the beneficiaries of this process. Already, China and Russia are loading up on gold. Mm-hmm. And in other words, they're using their dollars, they're selling their treasury bonds and using the proceeds to buy gold. Mm-hmm. There's no reason why they have to stop that. They'll continue until there's a global monetary reset in which gold moves back into the center of the global monetary system. So to the extent that they have new dollars coming in, they're turning a lot of those dollars into gold going forward. And the percentage of their their foreign exchange reserves that are in dollars will go down. So the trend is negative, but we're a long way from the trend reaching a point where the dollar is the minority compared to gold or something like that. That's still out there in the future.
Yeah, agreed. Hey, so we got one other email from a guy by the name of Arno, and says, thank you for your work and great people. I listen to you on my way to work, more productive than listening to the idiots, aka radio hosts, discussing the latest Kardashian shenanigans. I do, however, have two questions. A couple of years ago, I had some savings sitting in a bank account, getting almost no interest. And of course, it was taxable interest. He's in Australia, leaving me with almost nothing to show for it. On advice of some of your previous guests, I bought some Bitcoin at $600 a coin and have been very happy with the growth so far. Only regret was not selling on your advice. And just as a reminder, we put out a little newsletter on December 17th telling everybody to sell half their Bitcoin and their cryptos to lock in the profits, because even though we all knew it was going to infinity, infinity could take forever. So anyways, he's still happy, though. Only regret was not selling on your advice, but I am in it for the long term. You should still think about selling off half of it. I think it's going to go down to that 4,000 range, John. We all know that banks lend out money placed in bank accounts and only a small amount is retained. What will happen if the general population decide to follow my example and withdraw all of their savings and purchase either Bitcoin or gold as a way to protect their wealth? Second question, who determines the fractional reserve percentage of the banks? So it's kind of related to the first question, John.
Well, yeah, the government decides bank reserve requirements. In other words, they tell banks how much they have to hold in order to be able to lend against their reserves. And for instance, you see China manipulating that number all the time. In the U.S., it doesn't change very often, but fractional reserve banking is still a time bomb, because it allows banks to create vastly more debt than they have reserves against that debt. So, Claire, what was the first question again?
So basically, what happens when everybody goes to Bitcoin and gold?
Oh, okay. Well, Bitcoin and gold are basically competing forms of money. So when you take your dollars or your euros or your yen and you buy, for instance, Bitcoin with them, what you're doing is saying, I don't like this one form of money and I do like this other form of money. You're voting with your pocketbook to buy the competing forms of money that are up against the world's government-controlled fiat currencies. So let that go from what it is now, really a trickle, to something more serious. And then you've got a real challenge for the world's fiat currencies. Historically, what we've seen is that governments don't give up that power easily, because the power to make money appear out of thin air is really immense. That's the ultimate power in today's world. And governments have that power for themselves. They're the monopoly creators of legal tender. So to the extent that some other kind of money threatens them, they tend to react as anybody would when an immense amount of power is being taken away from you. And what they're doing with Bitcoin, for instance, right now, is increasing regulations around the world and taxation changes, and generally trying to make Bitcoin and the other cryptos less attractive in the guise of protecting investors. Now, historically with gold, for instance, the U.S. made gold illegal to own for its citizens in the early 1930s and didn't make it legal again until 1971, when we broke the last link between the dollar and gold. So expect to see more and more of that going forward as the natural trend out of fiat currencies and into real stuff, some of which will be cryptocurrencies and precious metals, really gets going. And that's, I think, the big risk in this story. I mean, if you just look at the numbers, obviously gold is going to go up in fiat currency terms because we're creating so much new fiat currency and the supply of gold is only growing at 1 or 2% a year. Obviously, that's going to happen. But the question is, how do governments respond to it? Do they confiscate gold going forward? Or do they regulate it in some way that makes it unattractive? Or do they tax it in some way that makes you a criminal unless you pay most of your profits to the government? Stuff like that is out there and probably also going to happen. So I think that in general, the owners of the best cryptocurrencies and the owners of well-chosen and well-stored precious metals-related investments will do well. But I don't think it's a smooth ride. I think governments aren't going to give up that power without a fight. And that's going to be one of the big stories for instance, gold bug going forward. You've got this stuff that's going up, but how do you keep the profit from it? and there's no way to know that going forward because there's no way to know exactly which ways which governments choose to interfere with the workings of the market.
That's exactly right. Really, the government has an undeclared war against cryptos until they can figure out how to control them. Arguably, the plunge in Bitcoin came right after, within days of futures contracts being traded on the COMEX. You know, when I wrote about the North American Bitcoin conference, what I said was the really sophisticated players, because the market's so inefficient and so shallow, are in a position to paint the tape and do whatever they want with cryptos and causing you to lose money when you're buying at the top and these crashes happen. And now they can keep the prices down, which is going to be down for a while. But in the end, they are very difficult to regulate. They're very difficult to tax. If you use a public exchange located in the U.S., then the IRS will get your records. But if you're using a foreign exchange, and I'm not encouraging you to do it, it becomes a much harder compliance issue for the government. So, but the fact is, if there's demand, it'll go back up to 19,000 again. The fact is now, because it crashed, the demand isn't there. But that doesn't mean that the demand won't be there. And it might very well be, like we talked so many times, John, it could be a cryptocurrency other than Bitcoin that becomes the beneficiary of demand for alternative currencies. But the search is going to continue on, John, no question about it.
Yeah, see, that's the thing about cryptocurrencies that isn't the case in precious metals. We don't know which cryptocurrency is going to win because they're basically pieces of technology. And tech is always replacing old tech with something better. And that could happen to Bitcoin, where Ethereum or some other cryptocurrency turns out to work better for one reason or another, and everybody buys that, and Bitcoin just languishes. So we can't know how that's going to play out because it's technology which is beyond the understanding of most people. Gold and silver are easy to understand, and they have 3,000 years of history. So they may be, they may have less upside potential, though they still do have quite a bit of upside potential, but they have a lot less risk than any given cryptocurrency. So I think gold and silver are part of your risk-free portfolio. Bitcoin and the other cryptos are somewhere further out on the risk spectrum and should be treated that way.
Hey, and, you know, being in Vancouver here at the Sprott conference, they're making the big announcement, even though it's been out a while, and we've kind of alluded to it a couple times, but it's not going to be a cryptocurrency backed by gold, but what it is gold stored on the blockchain. The custodian is the Royal Mint of Canada. Now, you can always say, yes, governments are corrupt, they're fake. When they need to, they'll steal all the gold in the vaults. And that probably is a concern. However, you've got Sprott involved in this deal. You've got Goldcorp. They're selling their production into it. And you've got Tradewinds, which is a well-known trading platform. So it's a major step. Is it the final step? Is this going to be the definitive gold backing of cryptocurrency? They haven't issued tokens yet to freely trade your gold holdings But it's a major step in terms of unallocated gold storage because you can look on the blockchain and know every transaction that's happened. So you can absolutely show between the auditors saying how much gold is on deposit at that vault and the blockchain showing how much has been transferred into what parties, not necessarily by name, but just by IP address, you can totally establish that the holder is being honest about their actual custody of your cryptos.
Okay, good. See, it's nice seeing the combination of gold and cryptocurrencies. And that's always seemed like that was going to be the ultimate end of this process, where we're just using the blockchain along with precious metals to create a product or a currency that is better than any of them as standalone entities. And so I love watching this happen, and I'm interested to see how it plays out.
Yeah, it's going to be great. There was another outfit. Steve has been bothering me for months, bothering in a positive way, not in a negative. Love getting your emails, Stephen, but saying you got to check out Quintric. You got to check out Quintric. And look, John, you get sick and tired of hearing about all these new kleptocurrencies that are created that are just means of shysters separating you from your dollars. But in this case, they were in Vegas at Freedom Fest. So I interviewed somebody, Jeremy, who's well placed in the company, and he explained it. Also gold backed. So what it is they got their first 5,000 ounces. They have like crowdsourced monitoring of the vault, and they're going to have auditing. I'm not so sure I trust where the metal is located. It's in the U.S. It's in like Utah, but they seem to think Utah will protect gold ownership if push comes to shove. I don't believe it, but hey, that's what makes horse races. But the point is, you can see the gold in the vault. Now, whether that's a picture of somebody else's gold or not, I don't know. But that combined with the blockchain showing the transactions going in, they did their first 5,000 ounces, and that's worth about $6 million, I guess. And the coins are 1/1000th of an ounce of gold, so they have a value of 1/1000th, whatever that comes out to. So it's roughly $1.20 something right now, each coin. And therefore, they're trying to make the coins as an accepted medium of exchange. I think they've got their work cut out, but hey, this is the creativity that gets unleashed, not just in manufacturing, but in the financial system as well, John.
Well, yeah, this is kind of a libertarian fantasy. A whole bunch of different monies are being created out there and then competing in the marketplace. And the best one will win if the market is allowed to operate.
Yeah.
And that's how you improve stuff. You compete and you come up with new ideas, and the new ideas that are the best ideas win out, and everybody benefits except the people who had less good ideas and go out of business. Hey. Creative destruction works for consumers rather than producers of stuff.
And it works for society. Okay.
Yeah.
So look, I won't get into globalization, China, or the flood of Chinese goods, because I think this is a form of economic warfare rather than free trade. And that's what Trump's been expressing. But we can agree to disagree on that. But the concept of coming up with new methods of doing business, new products, new services, and of course, the older entrenched industries are going to suffer. Just like, well, Tesla's a bad example, but the fact is he's a disruptor. So disruptive technology hitting the staid auto sector, which basically for 100 years plus 110 years, John, their whole life was, all right, it's time for the new model year. Let's put some new buttons on the dashboard and some new bells and whistles and sell it as a new car. And Musk says, no, we don't do that. The car, yes, there'll be model years, but our business model doesn't revolve around model years. We continually upgrade that vehicle. We will come out with new hardware, and that new hardware will be installed on newer cars. But the fact is, whether you buy a 2015 Tesla, John, or a 2018 or 19, the basic car is the same. Yeah, they got more sensors, different motors, etc. But their product release revolves around actual improvements to the product, purported improvements, rather than just, hey, it's a new year, let's come out with some new shaped taillights. Maybe we'll we'll bring back tail fins because they worked in the late 50s, early 60s, but there's no substantive improvement in the vehicles, although over time you can't deny that cars have improved dramatically from what we used to drive in the 50s and 60s. No question, but it's an evolutionary thing. Musk comes along and makes it a revolutionary move forward in automobile business and technology, which will eventually change the entire industry.
Yeah, actually, there are multiple revolutions going on in transportation right now that makes it a really good laboratory for this kind of thing. Because, yeah, you've got electric cars, which are arguably a lot better than internal combustion cars coming along. So they're going to change the basic technology of transportation. You've got ride-sharing services that make it unnecessary for a lot of people to own cars in the first place. And then you've got self-driving cars.
Yes.
Which also change almost everything about the car business. Because do you want a high-end sports car if you're not going to be driving it, if you're just going to be sitting in the back, or do you want some super safe kind of tank-like thing? So that changes the demand for cars in the market once that technology works. And all of this stuff is coming along at once. So it must be hard to get a good night's sleep if you're an auto executive, for instance, because you have to decide whether to adopt this stuff or to oppose it or to adapt in one way but not in other ways. And the car companies that do the best job of riding this wave are going to be the ones who succeed. Not necessarily the ones with the best technology, but the ones who are most adaptable. And, it's not clear right now how you adapt exactly to something like this.
That's for sure. Hey, and we see the same thing in the hotel business. Airbnb doesn't own any hotel rooms. It's the largest provider of overnight lodging in the world, many, many times larger than a Marriott or a Starwood. Well, they're the same now, or Hilton or Hyatt. So disruptive technology, bringing home benefits to you and me, but not necessarily to the masters of the universe, which is the way it should be, John.